Chapter 14. Step 4. Decide what kind of investor you want to be. Start small and learn to solve problems. Have you ever wondered why some investors make more money with a lot less risk than others? Most people struggle financially because they avoid financial problems. One of the biggest secrets my rich dad taught me was this: if you want to acquire great wealth quickly, take on great financial problems. In part 1 of this book, I discussed the 5 levels of investors. I would like to add one more distinction that defines 3 different types of investors. Type A, investors who seek problems. Type B, investors who seek answers. Type C, investors who seek an expert to tell them what to do. Type C investors. Type C investors are financially uneducated and look for people to tell them what to invest in. People in the E and S quadrants have been forced into the investing game because of changes in retirement plans. They have little interest in investing in their education so they can become better investors. They know nothing, which means they have to rely on the advice of other so-called experts. What's the chance of the Type C investor getting rich? About as much chance as winning the lottery. Type B investors. Type B investors seek answers. They often ask questions like, what do you recommend I invest in? Do you think I should buy real estate? What stocks are good for me? I talked to my broker, and he recommended I diversify. My parents gave me a few shares of stock. Should I sell them? Type B investors should interview several tax advisors, attorneys, stockbrokers, and real estate agents. Choose carefully and start implementing their advice. They should find advisors who practice what they preach and run fast from anyone who is selling investment advice and getting rich on commissions and fees alone. Type B investors should look for investment advisors who make money investing in the same investments they are selling. I often find that many high-income E's and S's fall into the Type B investor category because they are busy and have little time to look for investment opportunities or learn about the right side of the cash flow quadrant. Hence, they want somebody to give them the answers instead of gaining knowledge for themselves. This group often buys what the Type A investor calls retail investments, which are investments that have been packaged for sale to the masses. Type A investors. Type A investors look for problems. In particular, they look for problems caused by those who get into financial trouble. Investors who are good at solving problems expect to make returns of 25% to infinity on their money. They are typically level 5 investors with strong financial foundations. They possess the skills necessary to succeed as business owners and investors, and they use those skills to solve problems caused by people who lack such skills. For example, when I first started investing with only $18,000, I focused on small condominiums and houses that were in foreclosure because of problems created by investors who did not manage their cash flow well and ran out of money. After a few years, I was still looking for problems, but this time, the numbers were bigger. Several years ago, I was working on acquiring a $30 million mining company in Peru. While the problem and numbers were bigger, the process was the same. How to get on the fast track faster. If you start small and learn to solve problems, you will gain immense wealth as you become better and better at solving problems. For those who wish to acquire assets faster, I again emphasize the need to first learn the skills of the B and I quadrants. I recommend learning how to build a business first because it provides vital educational experience, improves personal skills, provides cash flow to soften the ups and downs of the marketplace, and provides free time. It is the cash flow from my business that bought me the free time to begin looking for financial problems to solve. Can you be all 3 types of investors? In reality, I operate as all 3 types of investors. I am a Type C investor when it comes to mutual funds. When I am asked, what mutual funds do you recommend? I tell the person, I have no idea. As a Type B investor, I seek professional answers to my financial problems. I seek answers from my advisors, including tax and wealth strategists, stockbrokers, bankers, and real estate brokers. When you find good ones, these professionals provide a wealth of information many people do not personally have the time to acquire. The advice from my financial advisors is valuable because they know trusts, wills, and insurance far better than I ever will. They are also closer to the market and more up-to-date with any changes in the laws and how that might affect the markets. There is much more to investing than simply buying and selling. I also give my money to other investors to invest for me. In other words, I partner with other level 4 and level 5 investors in their investments. These are individuals I personally know and trust. If they choose to invest in an area I know nothing about, such as low-income housing or large office buildings, I may choose to give my money to them because I know they are good at what they do and I trust their knowledge. Why you should get started quickly. One of the main reasons I recommend that people find their own financial fast track quickly and take getting rich seriously is because in America and most of the world, there are two sets of rules, one for the rich and one for everyone else. Many laws are written against people stuck in the financial rat race. In the world of business and investing, I find it shocking how little the middle class knows when it comes to where its tax dollars are going. Although tax dollars are going to many worthwhile causes, many of the larger tax breaks, incentives, and payments are going to the rich, and the middle class pays for them. For example, insufficient low-income housing in America is a huge problem and a political hot potato. To help solve this problem, cities, states, and the federal government offer substantial tax credits, tax breaks, and subsidized rents to people who finance and build low-income housing. Just by knowing the laws, financiers and builders become wealthier by having taxpayers subsidize their investments in low-income housing. Why it's unfair. Not only do most people on the left side of the cash flow quadrant pay more in personal income tax, but they are also often unable to participate in tax-advantaged investments. This may be another reason why the rich get richer. I know it's unfair, and I understand both sides of the story. I have met people who protest and write letters to the editor of their newspapers or try to change the system by running for political office. I say it is much easier to simply mind your own business, take control of your cash flow, find your own financial fast track, and get rich. It is easier to change yourself than to change the political system. Problems lead to opportunities. Years ago, Rich Dad encouraged me to develop my skills as a business owner and investor and then practice solving problems. For years, that is all I have done. I solve business and investment problems. Some people prefer to call them challenges, but I like to call them problems because that is what they are, for the most part. I think people like the word challenges more than problems because they think one word sounds more positive than the other. But I think that the word problem has a positive meaning that I know that inside every problem lies an opportunity, and opportunities are what real investors are after. And with every financial or business problem I address, regardless of whether I solve the problem or not, I wind up learning something new about finance, marketing, people, or legal affairs. I often meet new people who become invaluable assets on other projects. Many have become lifelong friends, which is a priceless bonus. Find your fast track. So for those of you who want to find your financial fast track, start by 1. Minding your own business. 2. Taking control of your cash flow. 3. Knowing the difference between risk and risky. 4. Knowing the difference between a type A, B, and C investor. To get on the financial fast track, become an expert at solving a certain type of problem. Do not diversify like type B investors are advised to do. Become an expert at solving one type of problem, and people will come to you with money to invest. Then, if you're good and trustworthy, you will reach your financial fast track more quickly. Here are a few examples. Bill Gates is an expert at solving software marketing problems. Donald Trump is an expert at solving problems in real estate, and Warren Buffett is an expert at solving problems in business and the stock market, which in turn allows him to buy valuable stocks and manage a successful portfolio. George Soros is an expert at solving problems resulting from market volatility, which makes him an excellent hedge fund manager. Rupert Murdoch is an expert at solving the business problems of global television networks. Kim and I are type A investors and solve problems in apartment housing that has paid off with a generous and steady flow of passive income. If we choose to invest in areas outside the multifamily housing market, we become type B investors, which means we give our money to people who have an excellent track record in their fields of expertise and who practice what they preach. I have one focused objective, and that is to mind my own business. Although Kim and I do work for charities and help other people in their efforts, we never lose sight of the importance of minding our own business and continually adding to our asset column. So to become rich quicker, become a student of the skills needed by a business owner and investor. Seek to solve bigger problems because inside big problems lie huge financial opportunities. That is why I recommend becoming a B first before becoming an I. If you master solving business problems, you will have excess cash flow, and your knowledge of business will make you a much smarter investor. I have said it many times before, but it is worth saying again. Many people come to the I quadrant hoping that investing will solve their financial problems. In most cases, it does not. Investing only makes their financial problems worse if they are not already sound business owners. There is no scarcity of financial problems. In fact, there is one right around the corner from you, waiting to be solved. Take action. 1. Get educated in investing. Once again, I recommend you become proficient as a level 4 investor before trying to become a level 5 investor. Start small and continue your education. Each week, do at least 2 of the following. A. Attend financial seminars and classes. I attribute much of my success to a real estate course I took as a young man that cost me $385. It has earned me millions over the years because I took action. B. Look for sale signs in your area. Call on 3 or 4 per week and ask the agent to tell you about the property. Ask questions like, is it an investment property? Is it rented? What is the current rent? What is the vacancy rate? What are the average rents in that area? What are the maintenance costs? Is there deferred maintenance? Will the owner finance? What types of financing terms are available? Practice calculating the monthly cash flow statement for each property and then go over it with the real estate agent to see what you forgot. Each property is a unique business system and should be viewed as an individual business system. C. Meet with several stockbrokers and listen to the companies they recommend for stock buys. Research those companies and consider opening a trading account and making some small investments. D. Subscribe to investment newsletters and study them. E. Continue to read, attend seminars, watch financial TV programs, and play cash flow. 2. Get educated in business. A. Meet with several business brokers to see what existing businesses are for sale in your area. It is amazing how much terminology you can learn by just asking questions and listening. B. Attend a network marketing seminar to learn about its business system. I recommend researching at least 3 different network marketing companies. C. Attend business opportunity conventions or trade expos in your area to see what franchises or business systems are available. D. Subscribe to business newspapers, magazines, and other types of communications.